welcome. You're watching Market Fatafat on ET Now with me, Snehisha, and with me is Vinny Motiwala. Now, this is a show where we're going to take you through all the big buzzers in today's trade, talk about the fundamentals, the technicals, everything within a minute. And before we do that, let's take a look at what the markets are up to. And Vinny, slightly sustaining in the green, but above 24,800 is where we're at.
24,800, yes, that's where we are at. Say good afternoon to you and good afternoon to all the viewers as well. But very range bound session, look at it. Since the get-go, we've just been in the 24,800, 850 range, not moving past that. So 0.2% of gain is what the Nifty is holding on to. Let's pull up the broader markets. Nifty mid-cap holding on to gains of 0.6%. So a bit of an outperformance that we've seen coming in for the mid and small cap in the last couple of trading sessions. Similarly, that trend continues even today. Nifty small cap also holding on to gains of 2/10 to 0.3% in trade. We have Nifty PSU banks, that's among the top FNO, top sectoral gainer as well. So keeping an eye out on that. Nifty PSU bank surely holding on to gains of 0.7%. But yes, a very range bound session is what we are watching out for. Today is the weekly expiry. One was expecting higher in terms of volatility there, but not much of a volatility that we normally see, which comes in on the weekly expiry day. Today for the Nifty, 24,800 is where it's sustaining.
Alright, so that's what the market picture is looking like as of now. But let's get started with all the stocks that are buzzing in today's trade. On the technicals today, we have Aditya Agarwala, the head of research and investments at Invest4edu. And on the research front, from our team, we have Gaurav joining us today. Thank you, both of you, for taking the time out and joining us on the show. Let's kickstart the show. Then I'm going to talk about the first big buzzer in today's trade, and that is Office Space Solutions. This stock has been soaring away in today's trading session. Last I checked, it was up 15%, has slightly tempered down, but nonetheless 12% higher in today's trade is where the stock is as of now, and these shares have hit a new high today, rising as much as 12% as of now on the back of the company's expansion plans in Bengaluru. It announced the launch of two new centers at the Mantri Commerce and Vista Pixel in Bangalore, and the company informed the stock exchanges through a filing that the centers offer 39,000 and 27,846,000 square feet respectively of built-up areas, expanding office extensive footprint and providing premium workspace solutions in prime locations. Looking ahead, Office plans to further expand its presence in India by adding 40,000 new seats in FY25, bringing its total to 135,000 seats by the end of the fiscal year. So very strong guidance which was given by the company in its exchange filing, and also on the back of the expansion of two new centers, Office Space Solutions up 12% as we speak.
Okay. Office space surely buzzing in trade, but let's move on to the next couple of stocks that I'm going to talk about. Transport Corporation as well as Aarti Drugs. Now, both these stocks are in focus. Why? They've said that the board will be considering to meet to consider buyback. Now, Transport Corporation of India, the shares were up as much as 16% at one point of time intraday when you look at it. And this is the first ever buyback proposal they will be considering. The board is set to be meeting on 24th of August to consider this buyback of its equity shares. How much are they going to be buying back? What is the amount over there? Surely we'll be keeping an eye out on that. So Transport Corporation as of now holding on to gains of 8%. Aarti Drugs too is in focus on this. On the back of that, they are too. The board will be meeting on 26th of August to consider a buyback, and this is since 2016. If you look at it, around the 5th of the sixth buyback that they are announcing as well. So keeping an eye out on both these stocks. They have been buzzing in trade. Aarti Drugs 6-7% uptake. Transport Corporation 8% uptake as of now in the stock.
Alright, so watch out for both of these buzzers in today's trade as well. But let's bring in Aditya on the technicals. And Aditya, you've picked out Apollo Hospitals as your first stock to talk about today. And when I take a look at the charts, last 6 months absolutely flat. So what momentum are you penciling in for this stock on the charts?
Hi Snehi, hi Vinny, good afternoon, thanks for the show. This was a consolidation after a good up move from what I see on the chart setup, and now it's gearing up for a breakout from that narrow consolidation phase. 6,800 on the upside is an immediate hurdle for the stock. The moment it starts to trade beyond that resistance of 6,800, 6,810, I think it's a good trade to take. You can easily see levels of 7,000, 7,100 on the stock in the near term. And if one holds on to the stock, maybe 7,500 is also that I see in the from medium to longer term on the stock. On the downside, 6,700 is an immediate support level. Now, if I plot moving averages and RSI and MACD, Snehi, all these point towards continued bullishness in the stock. There is no loss of any momentum on any of the momentum indicators, and plus volumes have been encouraging as well. So overall, it's a very healthy looking chart setup, and the risk to reward is also in favor of going long in Apollo Hospitals at current levels. Maybe you can add on to the position once it breaks out above that resistance of 6,800 to about 6,810 for a target of at least 7,000 to about 7,500 on the upside.
7,000 to 7,500 is the target that one can be keeping for Apollo Hospitals. Let's move on and talk about Interglobe Aviation then. Gaurav, this one is among the top F&O gainers today. How are you looking at it? What is the news flow behind this stock?
Well, yes. Indigo is once again in focus, and the reason being that now Jefferies has actually upgraded the rating to buy from the hold rating, and they have also hiked the target price to 5,225 rupees versus what it was at 4,400 rupees. Now what they believe is that the company has kept surprising the investors for the last 12 to 18 months, and they also believe that the long runway that the Indigo has shown will consistently go ahead in the coming quarters as well, including the new avenues that the Indigo is targeting. Now what they believe is that the supply addition is not going to be much disruptive. What we have seen in FY24 spreads was actually a best performance for the company. That may not repeat in this year, but we should see some levels sustaining at a healthy levels for Indigo. And at the same time, they also believe that Indigo actually remains at a driver's seat with new avenues of growth, and that is why they have increased the target price to 5,225 rupees. Now with this, it leaves a further upside of around 15% for investors. If we talk about the stock performance also, it is up almost by 3.5%. So definitely watching out on this counter on the back of some bullish view coming up from Jefferies.
Okay, surely keeping an eye out on Interglobe Aviation. But on that note, we're going to slip into a very short break. Don't go anywhere. More stocks after the break.
Hi there, welcome back. You're still watching Market Fatafat on ET now. Let's keep it going with all the stocks we're talking about in today's trade. And Aditya, you picked out Bharat Forge for us on the technicals. Now in the last 6 months, a decent 40-42% uptick coming in on this stock. Tell us, which direction do you see this stock heading towards on the charts?
It's a good trade to take at current levels. I think stock has broken out from a consolidation phase after taking support at the lower end of the channel. A sustained trade above 1650, 1660, I think, will propel the stock higher, closer to about 1800 odd levels. And a lot of these auto ancillary stocks have been looking encouraging, and recently they entered into a consolidation phase. Bharat Forge being one of them, after a sharp up move, did witness a sideways consolidation phase. Now I think it's getting up for a next leg of up move. So at current levels, it definitely looks interesting. Volumes have been encouraging. If I plot a MACD in trade today, it's given a crossover above its trigger line as well. So looks like a good trade to take at current levels with a stop loss just below 1550. Look for a target of at least 1800 on the upside.
Alright, so positive move, positive view in fact coming in on Bharat Forge by Aditya. Let's talk about Ireda, because that stock has also been buzzing in today's trade, up almost 10% as of now. The stock surged as high as 11.2% intraday, but holding on to those gains, slight a bit of a cut but not much. The rally comes after the company informed that it is considering fundraising of up to 4,500 crore through QIP, rights issue or any other means, and the board meeting in this regard will be held on Thursday, which is 29th August, to take up this proposal for approval. This is what Ireda has informed the streets. Well, on the back of this fundraising notice, Ireda, the stock is doing pretty well, up 9.8% as we speak.
Okay, let's move on and talk about an IPO that will be opening up for subscription on 27th of August to 29th of August. We have Premier Energies. This is a company that manufactures integrated solar cell and panel and has 5 manufacturing units in Hyderabad as well as Telangana. To talk about what should one be expecting, where are the funds going to be used from this IPO, which is a total size of 2,830 crores. We do have Chiranjeevi Singh Saluja, Managing Director at the company, as well as Adapa Srinivas, Chief Growth Officer at Premier Energies, joining in with us right now. Very good afternoon, gentlemen, and thank you so much for joining in with us. Chiranjeevi, I want to start with you. Now, first up, if you could understand, the IPO is a part OFS as well as a part fresh issue. Could you explain that who and why are we seeing an exit on the part of the OFS side, as well as what's the main utilization from the fresh issue part?
So the fresh issue is about 1,291 crores. The main purpose of the fresh issue is for setting up a greenfield 4 gigawatt each of solar cell and module manufacturing. This facility is going to come up in Hyderabad. 45 minutes from the Hyderabad airport in a 75-acre land parcel. This is a 3,400 crore capex spend which the company is doing. The OFS is primarily consisting of around 80% of the shares being sold by the private equity fund. GEF Capital is the PE fund which had invested in the company in 2021. And then there is about 15 to 20% of OFS which is being done by me as the promoter. This is the first liquidity event for the company in 29 years. We are a 29-year-old company manufacturing solar cells and modules.
All right, gentlemen, thanks for taking us through that. This is Snehi also joining in the conversation. Could you shed some light about exports? Is that something you are looking to focus on, and what's the company's strategy when it comes to exports going ahead?
Sure. So I will perhaps take this and perhaps answer this in two folds, right? So one, we very strategically positioned ourselves as a cell player in the US, and we continue to build on it. In fact, we've tied up with a local US company as a joint venture to launch local cell manufacturing plant in the US. So it's a JV between us and a US True Blue US brand called Helion, which have been operational in the US for the last 20 odd years. So that's obviously something which we look forward to hitting the ground in the coming 2 years. But having said that, what we bring to this JV is our cell expertise, the technology and the operational expertise, whereas our JV partner brings in the local ground support and the ground experience of running a plant in the US for the last 20 years. So yes, US is a key market for us, and we continue to invest in it, and we continue to tie up as we go.
Just to add what Srini said, we as a company, it's been in our DNA to always backward integrate. So not only are we growing in terms of geographical expansion to the US, we are also getting into backward integration. Today we make solar cells and modules. The raw material for solar cells is ingot and wafer. We as a company are also setting up a 2 gigawatt wafer manufacturing plant in India with an international player where we have signed up a JV agreement, and we will continue to backward integrate and add value in the total value chain.
Chiranjeev, we just want to know, and correct me if I'm wrong when you're looking at it, but the company in the last couple of years, like FY22, FY23, you see, was loss-making, and suddenly in FY24, we have seen it sharply turn around to the green. What really changed for the company in FY24?
Sure. I would share this with you. So we are a company, as I said, is a 29-year-old company. We have never had a loss in the 29 years except FY22. Is this because of the fact that we set up a large solar cell manufacturing line, got commissioned in FY21. It was the year of the COVID, and the lines take time to stabilize. When you set up a cell line, it takes about 2.5 years to set up a cell line and takes about 6 to 8 months to even stabilize these lines. So this was the period when we had exponentially grown our cell manufacturing, and it took about 6 to 8 months for the lines to stabilize, and that was the reason for the loss. Our lines have got fully stabilized from the last 9 months, and there is a very stable output and growth from our lines because lines are fully operational now with utilization levels of over 80%.
All right, Chiranjeev, thanks so much for breaking that down for us. That was all about FY24, but what's the outlook going ahead for FY25 now? Do you think profitability and margins, are they expected to increase further, or what kind of growth rate are you penciling in?
So I think we would refrain from any forward-looking statement. What we can talk about is that the numbers are already, demonstrated in the RHP, and we continue to work for the best, performance for our investors, and we'll continue to do so.
Chiranjeev, what I also want to know is in terms of the Indian solar module consumption market, the volume is poised to see a growth of around 40% CAGR in the next 5 years. How much of that share can you capture? Would you be able to grow faster than that 40% with respect to the top line?
So we are expanding. We have almost doubled our capacity in the last 12 months, and in the coming 36 months, we would be growing our cell capacity from 2 gigawatt to 7 gigawatt and module from 4 gigawatt to 8 gigawatt, which is almost 100% doubling from where we are today. And we will continue to make appropriate investments in line with the market demand.
All right, gentlemen, thank you so much for taking the time out and joining us on the show. On that note, we'll let you go. So that was the management of Premier Energies joining us on the show. But let's keep it going with all the stocks once more. And Aditya, you've picked out Ramco Cements on the chart. Now, tell us what momentum are you penciling in for this stock, and what's your recommendation? What are the levels you are spotting out for this one?
So the cement companies, they're looking strong in trade today, and Ramco Cement has broken up from a consolidation pattern on excellent volumes. So it looks like finally it's time for Ramco Cements to see higher levels from here on. On the upside, I think stock can easily test levels of 880, which happens to be the 200 DMA, and if it sustains beyond 880, then maybe 920, 930 is also something which is possible on cards. But as of now, we'll go with 880 target. On the downside, 810 is an immediate support level. Along with that, if I plot RSI on the charts on the daily and the weekly time frame, both are trading into the bull territory. So it looks like a very strong going for the stock, and I believe stock can easily test higher levels in the coming trading sessions.
Okay, let's move on. And Raymond is surging in trade today as well, up about 8%. Now, we did manage to catch up with the CMD, Gautam Singhania. Last week, I was talking about a very optimistic outlook. Listen in.
We didn't come from the real estate business, so we didn't know the business. We didn't come from the real estate business, so we wrote our own rule book. And I think our rule book seems to be working for us. I think today we have built one of the most formidable brands in Bombay market. We're delivering all our projects at least 2 years ahead of schedule. Our new project will be 2 years and 6 months ahead of schedule of RERA commitments. So we built a solid brand. You're absolutely right. Even Bandra, the bookings have been very strong. The reports that have come out show we're the number one in terms of sales in Bandra and Thana. Both markets we're number one. So that's a heartening and a rewarding feeling that in a space which is 25,000-30,000 developers, you're in 5 years right on top. That was a really lucky acquisition that we made, more a merger between our engineering business and Many Engineering. Many's got a lot of good skill sets, especially in titanium and aerospace, etc. The thing is, the merger has just finished a couple of months ago, and we have some big plans. So it's all on the drawing board, so I can't be very specific.
Sure.
But yes, there's a huge opportunity in that space, and specifically with Make in India. We are evaluating quite a few opportunities there.
All right, so Raymond, stock upbeat in today's trading session, up almost 6.5% higher, and big plans coming in from the management as well. But Aditya, you've picked out IEX on the charts. Last 6 months, a 35-36% uptick coming in on this stock. Time to accumulate more, or do you see some slowness or sluggishness coming in on this front?
I think it's time to accumulate the stock. Stock has already entered into a consolidation phase. If you look at last couple of trading sessions, or maybe last couple of weeks, stock hasn't done much for itself. So I think it's time to look at the stock again. Immediate resistance is at around 200 odd levels. The moment it sustains above 200 level, I think stock can test levels of 210 to about 220 as well. So looking at a 10% kind of an up move on the stock easily from here on. And one should definitely add the stock in the portfolio at least for a quarter or so, because looking at the chart setup and the big breakout that the stock has given from a long consolidation phase, the up move is not going to stall at just 30% up move. I think there is more room on the upside. So definitely at current levels, one should accumulate the stock maybe for a longer term time frame and look for a target of at least 220 on the upside.
Okay, surely keeping an eye out on that. Now, Alchem Labs, we're seeing a sharp spike up coming in the stock. Now, what is the main reason? Also, couple of reasons. First, yesterday we had heard that, maybe we will see a block deal that will be happening here. So we were keeping an eye out on the block deal. But other than that, we had seen a spike up coming in the stock because Nuvama believes that this is a strong contender for an MSCI November 2024 review. Believe the stock could actually qualify for the MSCI Standard Index inclusion at levels of around 6,300 to 6,400, and Nuvama Alternative furthermore said they continue to believe the stock is poised up for a rally. As of now, muted run off the day's highest point, but yes, trading with cuts of 310 to 410%.
All right, and Aditya, very quickly, you've also picked out Indian hotels for us. Tell us the levels that you're spotting for this one on the charts.
Oh, definitely. I think one of the stocks, strong looking stocks rather, and it's broken out from a symmetrical triangle pattern as we speak. So on the upside, I think it can easily test levels of 680 to about 690. Sustained trade above 645 odd levels will take the stock higher to closer to about 690 odd levels. On the downside, 600 is an immediate support zone. So the risk to reward is also in favor of going long at current levels. And the way the stock has been making higher rise, higher lows, I think the uptrend is going to resume soon. And you can see those levels of 690 in the near term.
Okay, that was Indian Hotels. Keep an eye out on those levels over there. But on the note, we're going to slip into a very short break. Don't go anywhere. More stocks after the break.